Hey folks, Dan Frio here, the rate update. When we come back, we're going to talk about rates, what affected them today, and some of the economic news that wasn't as bright as I was hoping it to be. So don't go away. We'll be right back. Okay, so everybody's freaking out about home values and everything else, but watch this clip real quick. I think there's some, we see a light at the end of the tunnel for home values because there's more supply coming in. As I told you guys would happen once this forbearance stops and a lot of the employment or unemployment benefits stop. And it stopped for over 7.5 million people over Labor Day weekend. So watch this and we'll be right back.
Well, the market is just coming down to earth some, and it's a good thing. Prices have been going crazy over the past year, and buyers finally have taken a step back. And so we'll see inventory increase, the market normalize. It's easier to put deals together than it was before Memorial Day. So I think it's really been a return to a healthy market.
What would you tell potential home buyers or current home buyers with respect to mortgage rates right now? Is it a good time if you're kind of if you're on the fence about buying a home, maybe to take out that mortgage and buy a home or refinance because rates are low? They may not be forever.
Well, at some point rates are going to go up, but I've been saying that for over a year, so really shouldn't take my word for it. I know that inflation pressure is building. I know that the Fed can't keep a lid on it forever, but it does seem that they're going to try. So I don't want somebody to buy a home that's the wrong home for you. I think it's more important to find a place you really love, but money is really cheap, and that's still going to drive some demand. So I'm glad that the money is cheap, but I don't want people to make hasty decisions.
You mentioned that getting deals done is becoming easier, which is very good news. What does that tell you about the supply that's currently in the market right now? As Diana laid out, that's been a key factor for helping drive up prices. Is supply normalizing at this point in time? Has it gotten back to, what we would have seen maybe back in 2019?
It's coming back to that level, but that was still an historically low level. We haven't seen enough homes on the market for years. And over the past year and a half, it just got catastrophically bad. So it is starting to get slightly better, but not significantly better. You are having more new listings hit the market, and that's increasing overall inventory because not all of that inventory is being immediately mopped up. What it means is that people are still snapping up the really beautiful homes, but occasionally when a clunker hits the market, it sits for a few weeks, and that's probably the right thing to happen.
Can you speak to kind of the disparity in income levels between, kind of the lower priced homes versus the higher priced homes? It seems like there's kind of this gap here where the higher priced homes seem to still be selling like hotcakes. Lower priced homes, maybe less so?
Yeah, it's actually more of a dumbbell. So really inexpensive homes are selling fast. Investors are snapping those up. And then the luxury market is crazy. And that just speaks to this K-shaped economic recovery where wealthy folks are doing really well. The professional class hasn't been affected much by the pandemic. And then other folks are feeling the pinch. So those middle class homes are a little bit cooler. But the luxury market, vacation markets, second homes, that market is just insane. It has been insane. It remains insane. And then at the very entry level, you're also seeing a lot of demand because investors are snapping up places and then putting on the market as rentals. And it's the homes in the middle where it's gotten a little bit softer and a little bit more reasonable. But at the ends, it's...
Okay, so that was good news for those looking for a home. And please watch my other videos because everything I'm laying out for you guys is coming true. And thanks, I don't have a crystal ball, but based on my 33 years in this business, there's a lot of cycles in a lot of these things. And being in the mortgage business, seeing hundreds of applications a day, I can get a gist of what's going on in the markets and why. The biggest thing is why. And a lot of this has come into play because of the forbearances that a lot of people, homeowners, have on their home, meaning they don't have to make mortgage payments for a year and a half, student loan deferrals, and the excess unemployment benefits for millions of people. That just ended. for 7.5 million people. There's a lot of people on there that were, they called gig workers that normally wouldn't even get unemployment benefits that were getting it during this pandemic. For example, if you go to a bar and you see somebody playing music, that's a gig worker. So a lot of times they claim their income and so forth. Then they say, well, they couldn't work because of COVID. They're getting more money. I was just in Florida last week, as you guys know, and I talked to the owner of Long Doggers. It's in Cocoa Beach. I'm going to be doing a video down there in a couple weeks. And the guy was genius, one of the partners of the business. And he talked about how and what they're doing to keep waiters and waitresses. They come up with this plan. They have benefits. They have 401ks and so forth. I'm not downplaying a waitress or a waiter or a bartender. But guys, when you have to start, giving them high wages and benefits and 401k plans and all that, all it's going to do is add to the prices of everything. And that's one piece of the inflation front that we're seeing. So now what's happening is all that's wiped out. So everybody's going to go back into the workforce. And I'm looking for next month's employment numbers to blow it out the roof. And that's why I've been kind of sitting back saying, guys, people aren't going back to work. Many people are making more money sitting at home than they were working. And I know there's a lot of people that have not, but there's a lot of people were. There's a lot of people that weren't doing the forbearance that didn't need it. They never missed a day of work and they haven't made a mortgage payment in a year and a half. What did they do with that money? They saved it, spent it, had a good time, invested it, so forth. So that's that part of it. But let's get into the headlines today with a lot of this stuff so I can explain to you and go kind of line by line what's going on. So we have a sharp rise in wages is contributing to the worries over inflation. Okay, and that's one of the things I just explained. When you start having to go to, I hate to say it this way, and I don't like this word, but unskilled labor. Let's just say unskilled labor. When you start having to pay pretty much high wages and benefits and all this stuff for unskilled labor, that's going to increase the prices of everything. There's a pass through there. The companies are saying, well, we still have to make excess of profit margin or at least get by. So we have to pass on these excess costs to you guys. So based on all this, what's going on today? My thought is the markets are reading it this way. They're like 7.5 million people just lost their extended unemployment benefits. What's going to happen? And the what if kind of, sort of, those things, that scares the major markets. Uncertainty is scary. Okay, so when they're like, okay, 7.5 million people are now not going to get, some of them were getting in unemployment plus an extra $300 a week. Okay, it's all going away. What's going to happen? Are people going to be able to afford their rents? Are people going to really start shutting down on all the money that they've been spending? I'm saying yes. You're going to start seeing everything starting to taper back, just like the guy that you watched the video for just now from Redfin. He's saying basically the same thing that I was saying. So that's that part of it. Tomorrow we're going to go through an in-depth search because I just posted a comment section on my YouTube video saying, what's keeping you from buying a home? And I think it was 70% of the people said prices. So I want to show tomorrow, and I'm going to go over national averages, and then I'm going to pocket some areas on how the rent payment you're paying, if it keep as is, and then wonder if it goes up 6, 8, 10% this year, and then maybe 3, 4, 5, 6, 7% next year, where would that put you as a payment? So we're going to kind of compare rent versus own tomorrow in a detailed video there. Then later in the week, we're going to go over, we have a down payment assistance program throughout the whole country that will give you a lot of money basically for free. It's forgiven after 5 years, and we're going to go that. So that's a little teaser what's going on for the rest of the week. So let's get back to where rates are today. So we saw the MBS market go down 17. Let me briefly explain this. I'm not going to go in detail every day. If you want to find out the in-depth of what the MBS market is, please check out some of my other videos. But basically, the mortgage rates are tied to, or a factor of, the biggest factor is mortgage-backed security. It's a bond that trades on Wall Street. What is its yield? Okay, this number is what we follow right here. This is what happened to the price of that particular bond today. As bonds work, the lower the price, and this was a lower price, the price went down of the bond. As the price goes down, rates go up or yields go up. Well, because this is a mortgage-backed bond, if the price goes down, mortgage rates go up. Okay, so that's basically what's happening there. Let's go to the chart for the day, and I'm going to bring that up right here, so you can see there's a nice little tight pattern that we've been working in, and that's right here. So this is the quarterly chart of what's going on. So we're basically in a condensed model right here. I'm just glad that this didn't happen again. Okay, because remember, when this happens, this is a huge sell-off. As this goes down, rates go up, and then we recovered back when, and then we stabilized from there. So I'm okay with this. This is a pretty big move. I think it's a knee-jerk reaction. I didn't lock, and there was no lock alerts that were issued today. So let's get on to the intraday chart. What happened during the day? Well, the whole day was kind of like but we had some big buying and selling right here, but we still ended down 17. Okay, so basically we actually opened the market down because a lot of people were just fearful. They're like, okay, with all these people coming off the unemployments, what's going to happen? There's not going to be, people aren't going to have all this excess money. What's going to happen? Well, unfortunately, it's going to go back to, and it's going to take some time, but people will get back to their normal spending habits. They'll get back to working again. Okay, so that's what we see there. So here's today's rates. As you can see, this is the 30-year terms, 30-year conforming jumbo FHA and VA. This is from Black Knight. They do a survey every day to mortgage lenders all over the country, and this is where their rates are. So the conforming is 306, jumbo 299, FHA 316, and VA 268. Now, guys, these are not my rates. These are rates, the average rates throughout the entire country. Then we look over here, 1 day, 7 day, and 4 week delta. Delta means change. So basically over the past day, actually past 7 days, actually the past month, there's really been no change here. You can see that there's 0 basis points here, 2 basis points. What's a basis point? Well, in this case, it would be 0.02. So the rates are up 0.02 over the last month. Virtually irrelative. So basically that's all that. We notice we try to focus on this to see where the bumps are in the road. Is there a big jump in the last day, last week, or last month? There's nice stability in here, and that's what I like. The daily, let me go through the economic calendar. I apologize about that. Let's go to the economic calendar. I got to go back to square one again. So we'll get to the economic calendar for the week, and you can see right here, the economic calendar for the week is. Today we had a bond market, yesterday bond market closed, 3-year Treasury auction today. That didn't do anything really there. The JOLT index is going to be out tomorrow. What the JOLT index is, this is a key indicator that I follow meticulously. Let me explain to you what the JOLT indicator report means. We see the unemployment rates, and we see how many people got jobs and how many people and so forth. But how many jobs are there really out there? Well, the JOLT indicator, the JOLT report tells us these are how many job openings there are. Don't be surprised tomorrow if this number comes in excess of 10 million. 10 million job openings. So if you're on the sideline right now saying, I can't find a job, guys, there's 10 million job openings that need filled. They might not be the ideal position for you, but it's a way to put food on your table. I'm just saying it that way. So there are jobs out there. People are going to say, oh, Dan, they're just crappy jobs. We can even see now, even waiters, waitresses, the unskilled labor piece of things, wages have gone up. And that's one of the biggest things we're concerned about is wage inflation. So I'm just letting you know, there are jobs available out there. There's millions of them. Okay, so that's that part of it. So I'm going to really pay attention to that tomorrow. And then Thursday, we're going to see the offset of that. How many initial jobless claims are there? And how many continued jobless claims are there? Don't be surprised if these numbers start to really cut back, meaning more and more people are getting jobs. They're not filing for unemployment claims, okay? So don't be surprised if this number comes in tomorrow in excess of 10 million. And then these numbers, it's not going to be in this report, but starting next week, the following week, and so forth, these numbers are going to start looking a little bit better and better and better. And then Friday, we start seeing a gauge of inflation. Now, the Federal Reserve told us what? If you watch this channel, you know this stuff. Their concerns are two. Their mandates basically are saying we want price stability, that's inflation, and we want 100% job people working, okay? But their main concern is the people working portion. So the numbers that are coming out in the next 2 days are very, very important to the Fed. Now, Friday is going to be a number based on if it's going to be good or bad. If you see inflation really skyrocketing again, you might see another sell-off in the mortgage-backed securities market, as we saw back in this frame here when I was showing you the chart right here. When I said, guys, this was a complete crash. Well, what happened here was when the markets start really pushing the issue, saying, guys, inflation is a huge concern. And then the markets just tanked. Okay, don't be surprised if we have a repeat of this, if we start seeing job numbers coming in that are reflective of this. So one of the things I do want to talk about later in this week, just as a teaser to you guys, is why aren't people buying? 48% of renters worry they will never be able to buy. I'm going to put you in a path to explain to you, is it a good time to buy right now? That's up to you. I think in the next 60 to 90 days is going to be a fantastic time to buy. How we can help you qualify to buy. Do you have money for a down payment? Might be hard. We have down payment assistance programs. We have technology that can help you get pre-approved within 15, 20 minutes. We have a staff of 10 to 15 loan officers that have been doing this on average about 15 years. So we have a whole team here to help you guys. So one of the biggest pieces of the puzzle, can you afford a house? Well, go to my mortgage calculator on our website, therateupdate.com right here, and you can plug in your numbers. You go to therateupdate.com, you scroll over to buy a home. There is a mortgage calculator piece right there. You go down to that and you plug in the numbers and it'll tell you what you can do. We're going to do in depth on this tomorrow to explain to you in different sections of the country how much the rents are that you're paying that are posted publicly, and then how much that can buy you, or how much could you afford with that payment. So let's take out the equation. You don't need a down payment, or you do need a down payment and you don't have it. I'm going to go over on Wednesday or Thursday down payment assistance programs that we have for you. And we have about 7 of them, because I'm going to go over the most lucrative one for you guys. So how do you find out more about me and my team? You like what I'm saying, but you're like, okay, how do I get a hold of you guys? First thing I ask you to do, if you find value in my channel, please give me a thumbs up. Subscribe down below, hit the bell. Every time I post a video, you get an alert. But how you find out more about me, you can Google me. My name is Dan Frio. Or you can go to my website. It is therateupdate.com. I ask people to do this. You're more than welcome to apply online. Okay, you can click right up here to the top right. Or if you're like, hey, I kind of want to buy a house, but I have a lot of questions. Well, you can do one of 2 things, or one of 3 things. Click here, buy a house, or if you're looking to refinance, click here. This is going to ask you a series of questions to help us pinpoint the exact program for you. Okay, but I like when people call and so we can talk to you. How do you do that? We can call 844-775-LOAN, 844-775-5626, or click right here. It's a brand new feature we put out about 30, 60 days ago, and it is tearing it up. You click there and schedule an appointment. It'll open up our calendar. It'll give you the days and times that we have available. You pick the day and time that you want, and then you tell us you want to do this by phone or Zoom. I suggest do it by Zoom. Then you get to see us, we get to see you, and we can maybe show you some things on our side. You can go over some things on your side, share the screen, and so forth. So that's it for today, guys. We have a big week in front of us. We're going to show you how much you may be able to afford when you're buying a house. And then on Thursday, we're going to go over down payment assistance programs that we have for you guys that's available almost all over the country. So that's it for today. God bless, guys. Take care. I'll see you tomorrow. Bye-bye.